Hey there, really quick message. Thanks so much for registering for the 2020 Virtual HR Roundtable, first one for this year, on people, money and metrics. The discussion was really interesting. I'm not a money and metrics person, but I found it quite interesting in terms of how we can add value and work within the context of our organisations with data and with financial information. I just wanted to quickly introduce myself. I forgot to do it on the call at the start. I didn't have my normal script in front of me. And so I am Lorissa Garcia. I'm a coach, mentor and facilitator, and I work specifically with HR practitioners in that space. And I guess one of the things that I really want to do is help reposition HR. I think the reputation of HR has suffered for quite a long time, and I'm wanting to look at bringing more human-centred approaches to HR, being more trusted, being more credible in the business and adding more value. And it's through things like these virtual HR roundtables where we can get little tips and build and stack some of the information that we need to be more valued and more add more value. So I hope you enjoy this one. The next one is on the 17th of March, Human-Centred Design in HR. So we have Rebecca coming back from Rowboat Consulting to talk about a business case that she's used HCD methodologies in to gain better engagement. I'm really looking forward to seeing you on the next call. Please reach out and connect on LinkedIn. Tell me you've seen my video or that you've connected through the virtual HR roundtable and we can start a conversation there. Thanks so much.
Fantastic. It looks like we're online. I'm hoping everyone can still hear me. Welcome to the Virtual HR Roundtable for February. So this is our first roundtable for 2020, which is really exciting. So there's a few new faces and a few new names that have popped up. We were just, the pre-show call, the pre-show chat was talking about where our people are coming from, and there's a kind of a global spread of people. So sunny Las Vegas, Clayton in North Carolina, we've got Melbourne, we've got some people registered in New Zealand. I'm seeing some other people come up, so I'm not sure where they are. Pop it into the chat if you are on the call and want to let me know where you are. So thank you so much for joining. Appreciate you coming on and spending some time investing in your own development. I think that as HR practitioners, we're not so good at that. We're good at fixing everyone else's oxygen masks, but potentially not our own at times. And so I just wanted to give you a quick overview of the virtual HR Roundtable and how it came about. So when I went out on my own, I left the corporate world, I escaped from the corporate world and went out on my own, and I was meeting some really amazing people and learning some amazing things, and I wanted to share that with the rest of the world. And so the virtual HR Roundtable was born to bring people together and just spend 1 hour of their week investing in their own development and hearing about hot topics in HR and in the world of people. And so I guess my aim through these is basically knowledge share and for the investment of your own development, and also to bring some of the amazing speakers that I get to meet on so they can share their expertise with you as well. So today's expert speaker is Cherry Birch, and Cherry and I were introduced to each other. We move in some separate circles, but certainly have a lot of common interests. And so Cherry runs a Financial Training Australia, and she works with HR partners and finance partners to level up their skills in the finance, money, metrics kind of areas of their roles, and making them stronger and more credible as a business partner in their particular organisations. So I will hand over to Cherry in just a moment, but what I wanted to do was just to quickly do a round out of the schedule today. So I'm going to throw to Cherry. She's going to talk for about probably 15 to 20 minutes. And then what we're going to do is throw it out for some questions. If you'd like to put your questions into the chat box, I'm happy to ask them for you, or if you want to ask them yourselves, just let me know there and we can throw to you for those questions at any time. So you don't have to wait until question time, you can ask at any time. So as I said before the call, we've got 46 people registered for today's call from all around the globe, which is exciting. And you'll get a recording of this particular roundtable as well after the roundtable has finished. So we'll send that over along with some resources and anything that Cherry is sharing with us today. So I might just throw it over to you, Cherry. I think it's yours. The stage is yours now.
Yep. Okay. So so I need to, in terms of my screen, is that now up? No, it's not.
I can see your beautiful face at the moment. So
Yeah,
if you want to just hit
sorry,
share again.
apologies. It's not, I'm not quite sure where. So share, right, okay. I think we might be there again. So how's that? Is that coming up?
There we go.
Yeah.
That's up now.
All right, okay. So, I'm trying to get it onto presentation. Right, okay, are we in business? Yeah, okay, well, great to hear all these people around the world, amazing. I always introduce myself by saying, when you see my name, Cherry Birch, you'll probably have a laugh, because I always introduce myself by saying I have a very stupid name. I'm a fruit tree. I managed to avoid marrying Mr. Brandy or Mr. Blossom, but I did end up marrying a tree. So I managed to acquire the name along the way. So it's always good for an introduction. Now, as we said in the introduction in the email that went out that that you signed up for in terms of this talk, is I'm sure that you are. Could somebody make sure they're on mute? David, could you be on mute, please? Thank you. To be a trusted business partner, and it's something that I'm sure you've heard about, you've heard that said to you, and the sorts of things that we imagine that you might have heard is people saying to you, oh, you need to understand the business. And you might also have been people saying, oh, you need to be commercially savvy. The reason I chose that graphic is a lot of you go, well, yeah, okay, but what does that mean? How do I do that? Or I am already doing that. So how do I demonstrate to you that I already do understand the business, that I am commercially savvy? So the theme of my talk is really to talk about the nuts and bolts behind it, the how-to, and to talk a bit more about how you can demonstrate the value-adding business partner, and also one who is commercially savvy, who does understand the business. So I'm going to look at the two aspects separately. So firstly, understanding the business. I hope you like my choice of graphic here. Not your typical accountant, I hope. But understanding the business is also understanding the finances. Now, if you work for a commercial company, think about it. At the end of the day, every commercial company is in business to make more money than sticking the money in the bank. Otherwise, why would they be in business? So if you're a not-for-profit, of course, it's very different. But there, I would suggest that finance is the enabler, and being smart about our financial management is as important in a not-for-profit as in a commercial organization. But again, understand the business, understand what the financial objectives are, what's the financial strategy. And this is where I think we need to make sure that you as HR business partners and as professionals, you need to have some basic financial acumen so that you can join in those conversations, so that you can be credible. You need to be able to read financial statements. You need to have confidence. I'm not suggesting for one moment that you need to be accountants. I'm just saying you need to understand, you need to have a certain level of financial literacy. And a lot of us will see profit and loss accounts, income statements, and you'll probably feel you know your way around an income statement or a profit and loss. But do you understand the balance sheet? Because the balance sheet is also important, and the cash flow. And when I think about understanding the business, if you're going to look at a set of financial statements, you can never make sense or never interpret financial statements unless you understand what you're looking at. You understand the business. Because when you look at the financial statements of a not-for-profit, say a healthcare group, as opposed to some lawyers, as opposed to a manufacturing company, the financial statement is going to look totally different, and the financial challenges, the drivers of the business are all going to be different. So when you think about understanding the business, I've got some questions that I wonder if you can answer. The first one is this, do you know whether your organization has a strong balance sheet? Do you know what a strong balance sheet looks like? Is it, would you it's not just the amount of cash in the bank, I would suggest. It's a lot more than that. So do you actually know, whether the balance sheet of your organization does it look strong? Are there lots of borrowings in it? Is it risky as a result? If you've got high borrowings, whilst interest rates might be low at the moment, it does mean that the organization has quite a lot of risk in terms of that debt, because at some point it's going to have to be repaid. How does it compare with other companies in the same sector? You can never make comparisons across industries, but you can make comparisons with your competitors. And that's where the area of ratios come in, because with ratios, one number divided by another number, you can compare companies of very different sizes and make comparisons, because you're looking at a ratio as opposed to absolute numbers. So how does it compare with other companies in the same sector? Do you know that? And do you understand the key business drivers, the financial strategy and the challenges? Because obviously the people element, what you're dealing with, has to fit in with that. And you need to understand what that means, so that you're not making potentially unrealistic proposals which don't fit in with where the company currently is, whether there are some major challenges. And we know obviously in the world today, there are a lot of challenges out there of different sorts. So do you understand what the key business drivers are of the organization that you work for, and indeed its financial strategy? And have you seen a presentation from the CFO, and did you understand it? So this goes on to the financial metrics and measures, because when we look at HR, and this is where I suspect that some of those comments about not being commercially savvy is coming from people thinking that HR isn't contributing in a commercial way, and I'm not one of those. I'm just saying that may be some unfair comments that are made. In terms of financial metrics and measures, why are they important, or are they? What can you do in terms of demonstrating your value to the business in terms of being that value-adding business partner? So this is a quote that I came across, which I like, and Lorissa and I had a bit of a chat about it the other day. HR professionals need to decide if they are protectors of the people or working to drive business results. And as Lorissa said, surely we can be both. It's not one or the other. But I think it's a good challenge to you as to what the perceptions are from other people in terms of how other people see you. So, are you seen as the protectors of the people, or are you seen as working to drive business results? And I would suggest, if you want to be a value-adding business partner, then the second one is the one that you may need to work on. I'm sure you will be seen as a protector of the people, or certainly helping with the employees, but are you seen driving business results? And Dr. John Sullivan went on to look at financial metrics and measures, and I love the language that he used. I hope it won't offend anyone. But he came up with two types of financial metrics and measures, and he classified them into the who cares types, the who cares, and they're very nice, but who cares? And the second type, which was the oh shit measures. And I'm going to talk about some of them, and then later what we'd love to hear from you is which ones you recognize or which ones you're actually using in your organization. Bearing in mind that you can use whatever ratio you want to use that is right for your business. I'm not here to dictate this is what you should use, because it's going to vary from organization to organization, just as I said the financial statements will. So in terms of the who cares ones, here's some examples. Now, I'm not saying, now let me just say, these are not ones that I'm saying don't do. I'm just saying they may not be the ones that you want to lead with when you are talking to, say, the CFO or the CEO, or when you are demonstrating your value adding, that you are contributing to the revenue, the profitability of your organization. So here are some. So employee engagement scores, cost per hire, yes, of course, and employee turnover rates, and we all know that those are going to have an impact. But what Dr. John Sullivan was saying is these are maybe some of the feel-good measures. These are maybe some of the who cares numbers that you might track, but they might be ones that you keep more in HR. Instead, what he's suggesting, and this is, I'm interested in your views, is he's suggesting that the oh shit numbers are the ones that are going to make the headlines, I guess, are ones that measure the impact that people have on revenue, profit, and productivity, depending on what is key to the organization. So, some examples. I'm putting them all up there because, and obviously you'll get copies of this presentation as well. So don't, but I'm interested in terms of which ones you might be using. So productivity improvement rates per employee, and turnover time to fill rates of high revenue generating positions. So it's not just staff turnover, it's looking at the turnover or time to fill rates of high revenue generating positions as a percentage of the cost of staff turnover. So it's homing in on the things that are seen as obviously the key contributors to the organization. Revenue per employee. Now, again, that may not be relevant if you work for a not-for-profit. Revenue per employee isn't going to be relevant, and it may again be revenue per certain employees, whereas other employees you don't see as it being useful. Average tenure. We all know, I'm sure you all know, that the research certainly most recently that I touched base on it, the statistics says that if you lose someone that you don't want to lose, say a middle manager, that the average cost is 150% of their salary. So we know that losing people that we want to keep has an impact on the bottom line, and there's been countless studies done on that, and that's just an average. So obviously keeping people for longer, the right people, is something that is important and is going to impact the bottom line. So I hope you can see the difference between these two types of measures. So the first lot are, as I say, are looking maybe more in the well-being area, the protection of the people. The second ones are homing in on things that are going to impact the profitability and the organization from its financial goals. So other examples, and again, there's an awful lot here that I gathered, sort of unscheduled absence per employee. And again, Lorissa and I had a bit of a chat about some of these ones. So if you take unscheduled absence per employee, if it isn't an issue at the moment, it may not be something necessarily that you want to track. But the point that I made was, you might start gathering information on some of these and check the trends. Out there now today, we have lots and lots of HR software, which gives us a window into not only, well, it gives us trending data, which could also give us some predictive data. So I think it can be useful to start gathering some of this data with obviously, I would say, obviously thinking about the cost of it, because if you've got some of the latest software, some of these numbers may pop up or can be easily generated. You've got to look at the cost versus the benefit, the cost of your time or the cost of doing all of this analysis. But I do think that trending is important. I was, when we were chatting the other day, I was sharing that I actually run training over in California for SAP, and I'm sure everybody, or most people have heard of SAP, a software company. They have some HR software called SuccessFactors, but one of the things that they're always talking to people about what their software will do is about visibility and predictability. And I think, again, in terms of business partnering, the more that we can help the business in terms of spotting things and alerting them to things that there may be trends and therefore predictions, is fantastic from the point of view of adding value and allowing the organization to plan for these events or to stop trends going in the wrong direction. So you've got, I think most of those on the screen there, they're self-explanatory. The one that a lot of these I picked, and you can, with any ratio, you can calculate it however you want to. So return on human investment ratio, I think sounds wonderful. I think you could calculate it whatever way you'd like to, but I'm thinking that it would be looking at the profit for the organization divided by the cost of employment, which, if it's human investment ratio, I would be picking up not just salaries and wages and all the on costs, but I'd also be looking at learning and development and staff amenities and all the people costs. So, but yeah, human investment ratio, I think it sounds very sophisticated, very good. And we also added to the last one in terms of looking at the number of full-time equivalents, FTEs, versus fixed times contractors. And Lorissa was saying we also need to look at the gig economy and the gig workers. So again, looking at trending there, we all know the way the world is going, so the FTEs may indeed be coming down as a percentage, and that may be a strategy that the organisation is employing. So there's a lot of those there. I hope that they would give you some opportunity to think about some of these, and I'm really interested to hear about which ones that you're actually using. This.
Mary?
Yes.
Sorry, just one moment before we move on. Can we just flick back? I've got a question from one of our audience members.
Yes.
She's in a high sales organisation and looking into the criteria of their highest sales earners. In terms of, can we just go back to the oh shit, that one? Yeah. So the second and third points, the turnover, time to fill, cost of staff turnover, and the revenue per employee. Are we able to talk about that in a bit more detail? Just so she can understand. So she's just started to do this, some tracking around that, and she'd like to understand whether she's on the right track and just sort of double check in.
Yeah.
What sort of things are we looking at, and how can we use that information?
Well, I think when you're looking at a sales team, then yes, those middle two are very relevant. Sales people are obviously often measured in terms of their revenue, and indeed their compensation. They may have a commission element to their wage, which is dependent on revenue. So you know, there may be that revenue per employee may already be factored into the way that they are remunerated. The turnover, so the staff turnover, time to fill high revenue generating positions. Again, it's and the cost of staff turnover. I mean, you're looking at the turnover rate. These are, I put these all together because they're all in the same area. So you can look at the staff turnover of particular positions. So if you've got key talent and high revenue generating positions, you might be tracking the turnover in those rates. Sorry, turnover in those positions. And then obviously once you've got the data, the data is really only the traffic lights of maybe actions that need to be taken. So if you've got high turnover, you need to obviously, I'll leave it to you, but obviously you'd investigate the recruitment processes and the management and maybe the manager of that area in terms of what is happening. And the cost of staff turnover. The cost of staff turnover, this is where you can use some very sophisticated accounting tools, but I would probably be being just conservative and using, like I said, the 150% as being a guide, but have a look and see whether there's any more recent research data which relates to your industry about the cost of staff turnover and losing someone that you don't want to lose. So yeah, all of those, they're not all, they're not one thing divided by another by divided, they're ones that you can select. And if I may go back to this slide, because it's relevant to what we're just discussing, Peter Drucker, whom I'm sure lots of you have heard of as a management guru, one of my favorite quotes from him is, to that what cannot be managed, what cannot be measured cannot be managed. And that's very true, and that's great when we look at metrics. But he also said, and not so well known, to control everything is to control nothing. And we can get into analysis paralysis, trying to measure everything in sight, and that's not helpful. And this is where you link it back to knowing the business. Knowing the business, understanding the key drivers, understanding what is important to measure, not try and measure everything in sight, because you're going to waste a lot of time and probably waste a lot of money in terms of your time and anyone else involved in it. So it's understanding the key drivers, understanding the challenges, tracking the things that really are important to the business and focusing on it. It may take time, it may evolve rather than being something, if you start on this journey and you haven't got much in place already, it may take time to identify the things which are really important to the business and which ones are more relevant and which ones that are more appropriate than others. This isn't, I don't think, a quick fix if you are just starting on this journey. As I say, it is going back to understanding the business and then thinking about what would be appropriate. In terms of this could be, I think, I think we agree this could be a talk on its own in terms of how do you measure the return on investment of learning and development. I've always loved the quote that I put there: if you think training is expensive, try the cost of ignorance. But then of course I'm running training. So this was came back from GE with regard to a leadership program, and the person from GE said what we actually measure is, the best measure of the return on investment is growth, personal, organizational, and profit growth. And the questions that they're asking are, do people want to work for that leader? Do we see a skills gap close? Are they going to be in the succession plan? So not so much the metrics, more about looking at the impact that the training has. And as most of us know from training, it's very hard to say that training gave that result, because obviously it's in a lot of other things are happening and you can't isolate it on its own. So in terms of questions, I have a few for you to start off the conversation if there's not a whole lot lined up already, Lorissa. So the questions I've got are, what metrics and measures do you currently use? Are they lead or lag measures? So what we mean by that is lead would be ones that are more real time, ones that are going to be more predictive rather than historic, which would be lag measures. What could be relevant to your organization? What would be or are the benefits of such metrics? And business cases, of course, is another area which is sometimes really hard from an HR perspective. So, how would you quantify the return on investment if you were putting a business case together? So I'll leave those questions up on the screen, and back to you, Lorissa, in terms of asking who's got questions.
Sure. So there's no one has put any other questions in the chat. So if you've got something, please pop it in there. I guess one of the questions that I had, as you just mentioned, that lead and lag measures, Cherry, is do you find that because of AI and the kind of power of some of the systems that are currently around, that lead measures and real-time information is more prevalent now? And what benefit does that bring versus reporting on some lag measures?
Well, I think it is, and I think there's an expectation by business that we do have more lead measures, that we do have more real time, because everybody's aware of the technology and the technology that's out there. So people, I guess operational managers and key decision makers are expecting to get more real time. As we also know, financial data tends to be a lag measure, it's historical. So if you're going purely with financial, they tend to be historical results. However, now we are also seeing with the developments on the financial side, with the financial systems, that data, whilst it's historic, is being produced that much quicker. So if you take end of month and producing monthly accounts, those are coming out in some organizations, by the second day or the third day or the fourth day. It's pretty immediate. and the more immediate that you've got measures, obviously the quicker you can take corrective action if it's needed. So people want to have what's going on, and they also want, as I said before, they'd ideally like some predictive measures as well. So some predictive data that's saying, if we continue like this is the trend, and this could be great, but this could also be a problem, and what are we going to do about it? So it's facilitating decision making for the business, really. And the problem with lag measures is, well, that's all very well, that's in the past. Whereas if we've got stuff, and particularly when we've got trending data, it allows us to recognize what might be happening and what might be around the corner.
Mm. What are some of the examples of some lead measures that you've seen in the people space? And I throw that out to everyone. I think it would be, helpful.
Yeah, I'd be interested to hear what other people have got to say in terms of, and particularly what measures that they're using, because I'm sure there's a lot of experience on the call. So I'd really like to hear what people have got to say.
Mm. I mean, one of the lead measures that comes to mind straight away for me, and maybe it's in the who cares kind of section, is around some pulse, around culture or engagement, getting some pulse kind of real-time results. So there's some organisations that use it's a little button, 3 buttons, and as people are leaving the office, they can say whether they're feeling sort of engaged, neutral, or disengaged as they're walking out of the office, and getting some of those, kind of feedback on a daily basis, or in a real time as they're leaving the office.
Yeah.
Mm. So Jennifer says she'd love to see sales to staffing trends, or production and distribution output to staff ratios. Wonder if anyone else has come across anything that that reports that in their organisation, particularly maybe some fast-moving consumer goods organisations or production companies. Is there anyone on the line that would like to share anything? No. Jennifer's given a perspective about historically, as HR, we hate dealing with numbers. So certainly in my case, Jennifer, that's correct. I really struggle with the numbers. It's something that, and hence the reason why I'm so excited about having Cherry on today. As an HR practitioner, I think we are. Some of us are more drawn to the people side of things and the softer parts of HR, and I guess this is one of the reasons I get people like Cherry to come and speak to us, because I think where we're getting feedback around HR's reputation, it's often around the fact that we don't know the business, we don't understand the business, and so if we can just get 10% of more around metrics, or 10% more around our understanding of the business, understanding the business strategies and the direction of the organisation, and who our competitors are and who our target markets are, and then start to use the data that we've got to relate back to the information in that strategy, to talk about, one of the things that come up earlier for me was is the who cares. I think it's also about we can do the softer stuff, we can report that softer data, but what does it mean? I think we need to say, so what? So what does it mean for the business? We've got this data, and can we flip back, Cherry, to one of those, the sort of who cares?
The shit numbers, or the who cares?
I've got the shit numbers.
The who cares.
The who cares numbers. Employee engagement scores, that's a really great one, I think, is that they are important to the business in some way, but what does it mean? It's great that we've got a good score, but what does that mean?
Yes, and that and can I also say, Jennifer, because it's something I've heard. You go into HR because you're interested in people, and I do a lot of training for in healthcare, so I have nurses in the room, and they definitely don't like the numbers. They're all about people. I'd say in fairness as well that sometimes finance people are not the easiest to communicate with, and I do sometimes blame my fellow accountants of not making the communication clear, or making the complex simple. There's a lot of people out there who keep the complex complex rather than help, so that to help you understand when you're not an accountant. But I think, unfortunately, I think it's so critical to the business that you need to persevere and need to learn the language. One of the resources I'll point you to at the end of here, and you're welcome, is on my website. There are a number of resources, including a glossary and of financial jargon and accounting terms, and you might find that useful. You can also download a copy of it. There's a PDF file on the website that you can download, and if you have any problems, just drop me an email. That might help. But it's I think, just get yourself up to speed if you can in terms of understanding the basics, so that you can start to have these conversations. And if you don't understand something, you need to ask questions until you understand it.
Yeah. So Kylie has put in, she can't get her tech to work, so she's asked me to let you know that she works for a large, fast-moving consumer goods organisation. So she measures production output, quality and safety for their production sites. She also says we're currently sourcing a people data full-time equivalent to measure all things people on Power BI. I'm assuming Power BI might be some software.
Yeah.
She said that finally organisations are seeing the value. Once we see data, then it's what we do with the insights. And I think that's a really good point, is that we can do all of this reporting and spend hours with headaches because we're getting too many numbers in our heads, but it's actually seeing action. And what do we do with it?
And it's also what you just said, coming up with the so what. So
yeah.
We've got all these results, so what? So what is that saying? What does that mean? How is that going to impact? And if you start thinking financially, what does that mean in terms of our profit for the year? So how's this going to translate to the bottom line? How's this going to affect our revenue for this year? And what might it mean for next year? So the more that you can translate things, when we sometimes, the people element is sometimes hard to translate into financial. Most of us would be aware that if we start saying, if we do this initiative, we can improve morale in the organization. Now, having happy people is great, and we know that that's important, and we know that's going to have impact. So what's the impact, the financial impact? Well, the most people would agree that if you've got better morale, then your sickness levels are going to go down. So your sick leave you're going to save money on sick leave. Also, your retention should go up. Your staff turnover should go down. So it's translating some of these things, which might be more in the, if you like, the employee well-being space and the softer measures, into something in terms of financial. We may not be able to get down to the exact dollars, but we can probably put we can translate some of these measures into, okay, so what does that mean in financial terms? And the more that you can translate what you're measuring into the impact on, as I say, on revenue, or in terms of the profit, the final net income, net profit number, I think that people will wake up and take more notice, I think.
Yeah, absolutely. And I'm really interested in what you just said there about, when engagement is up, retention is usually up, absenteeism is down. How do we as HR practitioners, I think it's a question for ourselves as much as anyone on the call, is how do we attribute a cost to that? I'm all about working to our strengths, and my strengths is not numbers. My strength does not lie in analytical and detail. And so, one of the the things that I did was find someone in the organisation who could be the translator for me, who could act as that translator, and partner up with them and get an hour with them a week, or an hour with them a fortnight. And sit with them and say, I want to talk about our engagement scores are up and our retention is stable. What does that mean to the business? What does an engagement score, mean? What does it mean if our engagement drops, by 10%? What could the costs of retention or absenteeism do for our business? And really be able to kind of talk to those numbers with senior exec.
And if you've been, you may have historical data that you can start doing your own research internally and say, oh, we've been doing engagement surveys or staff surveys now for the last 5 years. We've also got the financial data, and we've actually got numbers on sick leave, and we've got staff turnover numbers. Let's have a look and see whether there is a correlation between our staff survey results and those numbers. So if we can demonstrate a correlation within our organization, that's even more powerful, because we can say, look, when this number is, when our staff survey, our engagement numbers are higher, then look, there's a negative correlation here with sick leave and with staff turnover. So it should follow. It may unfortunately go the opposite way, but it would be good to, if you've been doing the survey for a while, it's great to gather your own internal data to see whether in fact it does play out that way, and you can show, you can demonstrate that these things on their own are not just the, oh, so who cares? They do impact the bottom line.
Yeah. One of the things we spoke about the other day, Cherry, was around context. I'm big on context. And so if you've been on a roundtable call before, you'll hear me talk about context. And context, when I talk about it from a metrics and finance perspective, is around making sure that the information that you are gathering or reporting upon is relevant for the context of your organisation. And so you're not going to try and, look back on 5 years of employee engagement scores to get some tracking or some trends if you're in a fast moving startup, because it's going to change and it's going to flow. And so, looking for patterns in information that's relevant for the organisation. Yeah. Have you got anything else to add to that, Cherry? I think, we had quite a long discussion about that the other day.
Yeah, organizations do change and are changing and needing to change. So it is hard because, it is, if you take historic measures, but I think the trending data is, I think if you've got trends, about some of the changes already, but if you've got trending data, that can be really helpful to help with predictability. And I think that's how you may start, or you may say, well, okay, we need to keep revisiting. I mean, you may be working for an organization where you've been measuring you've got particular metrics that you've been using forever and a day. It's time to review it. And like you said, Marissa, I mean, things change, and it may be that those measures are not really helping to be predictive of what is happening and how the business is going to perform. So I think all of these things we need to review. We don't set and forget. We need to look at it and say what's relevant, and it goes back to, again, understanding the business.
Can you flick to the next slide for me, please, Cherry? Just so that we can maybe the next one with the types of things that we.
Yes.
Yeah. I'm really interested in, anyone that's got anything to share around anything they're doing at the moment in their own organisation in terms of tracking this data or reporting, and how you report. Is it reported up to your finance partners? Is it reported up, much higher? I'd be interested to see how that's kind of going around in organisations. Cherry, have you seen any sort of really, organisations that are doing this really well? Is there organisations out there that we can look at to say, well, these are the types of things they're measuring, and this is how it's benefiting them?
I haven't personally been close to organisations that have done this. I think there's certainly in terms of, there's a lot of stories out there about some of the data that's been revealed by the implementing new software and being able to cut down on costs, or to reduce staff turnover, and therefore increase in terms of profitability. I was reading an article the other day, and this is something that you and I discussed, which goes back to the training, where people are saying, okay, you know, now we're doing so much more e-learning. We've managed to cut down the cost per employee of our learning and development. My question would be, how effective is it? There is another way of measuring things which I think is called, is called cost effectiveness analysis, where you looked at the end outcome, and then you look at various approaches in terms of what is most cost effective when you decide on the outcome that you want. And you know, it's all very well saying, okay, well, we've managed to cut down our L&D cost by this much because we're now doing so much more online and it's all accessible 24/7. But does it mean that employees are being developed from that perspective as effectively as they previously were, when there was possibly more face-to-face? So I know it's a trend, and I know that blended learning, I know e-learning, and I'm involved in writing e-learning at the moment for a client. And we're also talking about micro learning, and I just have some concerns about how effective it really is. So yeah, so again, you can measure, you know, financial measures are, and you know, I'm very mindful of the financial measures. We can't just look at financial measures. I know, again, accountants get accused of this, of not actually looking at what is needed by the business or what's needed by the people. These are measures. I'm advocating that you need to show what you're doing and how it is impacting the organization from a financial perspective, but I'm also turning it around and say sometimes the financial measures might work against us in terms of just driving down cost, maybe at the expense of effectiveness or actually value adding.
Yes. Yes. So I was just, interesting you should bring that up, Cherry, because I was just thinking about, it took me back to an organisation I worked for quite some time ago, and we had a staff member who would spend probably 70% of her time just doing reporting, looking at all of the data that was coming in and manipulating spreadsheets, because the organisation didn't have a system that could hold information and manipulate data. And she would spend all of that time, and it would go up a level to sort of that next level of HR managers and be discussed at a team meeting, and then great, let's move on, it's time to go to the next thing, and nothing happened with that data. And so the time and the investment and then the effort put into that, bringing that data together to go nowhere, I think, you know, is something that as HR partners we need to really think about where we're spending our time. We're already, you know, overloaded usually with work and trying to keep up. And so thinking about, and maybe asking the business, you know, going to the business, going to your executive and going to your senior leaders and asking what would be helpful for them to understand, what would be helpful for them to know. So yes, I think, you know, thinking about where we're being effective in terms of reporting is something that we need to think about very carefully.
Yeah.
Kylie has said that they're moving to leader self-reporting using Power BI. So that's a platform where leaders can drill down into their own department data metrics. So she said that it includes basic data, turnover, time to fill, annual leave balances, time in role, etc. And she said they specifically measure positive data, for example, well-being linked to keeping annual leave to below 20 days per year, which is a great one. I'm wondering if anyone else is doing that type of reporting, because that's more proactive reporting. That's that sort of, you know, lead rather than lag, isn't it?
Yeah, and annual leave is a good one, because you know, we want from this is my financial hat on again. From a financial perspective, we want people to take their annual leave in the year in which they earned it. Because there's a number of reasons, obviously for their well-being in terms of taking leave and having breaks. The second reason is a financial one, that if they get a pay rise the following year and they've carried forward their leave, they're actually taking their leave at a higher salary than they actually earned it. So that's not cost effective for the business. The other one is, and one that I've raised many times with participants, and that is that if someone doesn't take leave, doesn't take their annual leave for a long time, and actually, gets a lot of annual leave, it could be a real governance issue, because some of the biggest frauds are uncovered when someone either leaves the organization or maybe has an accident and can't come into work, and that they haven't been taking leave. And what's happened is a lot of frauds in business start very small. Someone borrows from petty cash. Obviously, you've got to have the opportunity, but often they start small, and then someone gets away with it and they find it's all too easy. So it gets bigger and bigger and bigger. And when it gets bigger, what the employee has to do is to start covering it up. So they start putting through transactions in their area. And it may be they set up a transfer to a personal account. It may be some frauds involve setting up dummy suppliers or dummy employees on the payroll, etc. Not that this isn't a session on how to commit fraud, by the way. But these things then, because they've then set those up, they don't want to go on leave and someone doing their job, because if someone comes in and fills in for them, they're going to start saying, oh, what's this transfer, or what's this dummy employee, or whatever. And so what tends to happen is they don't take leave. So not only is it a good one to track for all the positive reasons of well-being and the cost to the organization, but it's also from an internal control and a governance perspective, it is really good to make sure that people take leave. In fact, I believe that most financial institutions have in their terms and conditions that you have to take 2 weeks, back to back, so that someone will fill in your role. But yeah, so yeah, and I find that whenever I mention that on classes, I always find there's someone who's got a story of a fraud that's that they've come across, not that they've committed, but in a previous organisation. Some of the stories are quite amazing, and often this goes on for years. And a lot of it, of course, is where it's your boss. So when you're new and you see some unusual behaviour, you don't know that it's unusual when you're new, so you kind of accept it as being the norm. There was one nurse was talking about her manager who saw patients in her office, and she often saw money changing hands. So it should have been, it certainly was very strange. So yeah, those sorts of things.
Yeah, interesting,
yeah.
Interesting. Yeah. I just wanted to jump back to and revisit the wellbeing measures that are being tracked by Kylie's organisation. So as we said, she's linking wellbeing is linked to keeping annual leave below 20 days per year. I'm interested in what other, as HR professionals, we need to be able to prove the return on investment for some initiatives that we're running, and a wellbeing one is a really good one, because it's often hard to get those things across the line in a business case. What other sorts of things could we be measuring in terms of our initiatives, Cherry, that that can prove to the business that it's a worthwhile initiative?
I'm thinking about, when you think about the amount of stress that employees are in, and if we take Australia, the current data is that 1 in 3 Australians are financially stressed, in terms of well-being data. It's so I guess it all comes, the only, and I'm thinking that you guys out there probably have a better idea about what the flow-on effects of the stress is, but I would have thought that the only sort of data we're really only going to be able to home on is sick leave, absenteeism, as you say, which may not be sick leave, may be just a day that doesn't need to be signed off, rather than actual sick leave signed off. And also staff turnover, maybe. Yeah, it's going to come when well-being is not there and employees are stressed. It's going to turn into sickness. It's very hard. Usually, it's very hard to measure productivity, because obviously productivity would would suffer. But unless it's in most organizations, I would have thought productivity levels are very hard in most roles to actually measure.
Yeah.
So yeah, I think it's unfortunate that it's coming out, if you like, the way that you're going to see it is the negative side rather than the preventative side. So obviously you're trying to drive those numbers down in terms of the sick leave and absenteeism and turnover.
Yes. Yeah. So I think often we kind of look to those negative things and trying to measure the negative, those things that can be measured, the things that are absenteeism or, the cost of leave and things like that. Kylie, on the flip side, is measuring wellbeing days and volunteering days. So she said the higher the better, without being out of control. So people taking an afternoon off to go to a kid's concert, for example, it's balanced with business needs, but it's also something that contributes to the wellbeing of staff members. And so being able to measure those smaller things where you can certainly contributes to return on investment of a business case.
Yeah, I've also got a client who's looking at a health program and has measured employees' health, but there's been pushback from some employees in terms of privacy and feeling this is going a bit too far. But in terms of well-being and trying to get people to get more healthy from a sort of more fitness thing and supporting, joining sports organizations or clubs or doing stuff, but also measuring it. And I'm not sure. I think the jury's out on that one with my client as to whether it's being effective, because some people are kind of almost resent it.
That's interesting. I think, thinking about as an example, a gym membership, how many people are taking up that gym membership and utilising that gym membership? So from a utilisation perspective, there doesn't need to be any reporting on who, it's just maybe a number. Same as an employee assistance program or a counselling service.
Yes, and of course with this organisation, the employees are saying, well, just give me a better salary. Don't go spending it on measurement machines in the office of my health or gym memberships. I prefer just to have the salary to decide on how I use it, which is where the pushback is coming from. So.
Yeah, right. And I guess, as HR practitioners, it's listening to the employees, isn't it? And saying, well, okay, how can we create an environment that still allows you to be, have a level of well-being that's healthy for you and efficient and effective for the organisation. Interesting. Is there any other final questions? We've got a couple of minutes to go. We're just about to wrap up. But has anyone got anything else that they'd like to add in? So thank you so much for being on the call, everyone. It's been a great discussion. I'm really excited about these sorts of things because, as I said at the start of the call, it's not my strength at all. Numbers and finance and metrics make me feel a bit ill sometimes. So it's good to know that there's some really simple things that we can do as HR practitioners. And this, I jotted down some takeaways as we're going, and I think you can be the protector of the people and look after the business at the same time. I think it's being able to take that who cares data and say, well, so what? What does it mean for this business, and how do I make something out of that that's relevant for the executive and the leadership? The other thing is to find a partner or a translator within the business. So find someone that's in a finance role or a role that's, that deals with metrics and numbers and that you can partner with and spend some time with to say, well, this is what we've got. What does, how can we make something of it? So find a partnership and make it relevant for the context. Make sure that what you're reporting on and what information and data you're collecting, you're doing something that's relevant for the business, and then being able to take action, because it's only then that you'll be able to prove credibility in the role that you're in. So again, thank you so much. We'd love for you to connect with us on LinkedIn. So we'll send you Cherry's details with the recording of this session. And so jump onto LinkedIn and connect. Cherry publishes some really interesting content on LinkedIn around the finance and kind of metrics area. So jump in and have a look at some of her content, and of course jump onto our websites as well. So we'll send those over. The next roundtable is on the 17th of March. And we've got someone returning that's been with us before. So Rebecca Lloyd from Rowboat Consulting was with us in January last year, and she presented on human-centered design in HR. And so this next one is a business case around how they've used human-centered design methodologies in an organisation to really build engagement. And so I'm sure it's going to be a really interesting roundtable. But Cherry, thank you so much for joining us and sharing your expertise. It's been amazing, and I really enjoyed kind of digging down into some of those metrics and understanding how they affect our business. So thank you so much, everyone. If you've got any questions, please reach out. And if there's a topic that you would like to see on these roundtables, then again, reach out. You know, I'm always open to discussing what's hot in the people partner space, or what people are really curious about. So go forth and enjoy the rest of your day, and
thanks,
hope
guys.
to see you on the roundtable.
Yeah. Okay. Bye.
Thanks, Cherry.
Bye.
Bye. Thanks, everyone.